What's up, traders? Welcome back to Bangkok in Thailand. Today we'll talk about how to have a probability mindset in trading. Something that is really important if you're someone who has a lot of losses or you put more risk on a trade because you think it's gonna work. And that's something people don't talk about much. So let's dive right in. So this is a topic that obviously no one talks about. They prefer to talk about, of course, backtesting, things that you can do to find out the probability of winning, that kind of stuff. But no one talks about the mindset and how to change your mindset into a probability mindset. And that's something I want to cover here today because it's super important for you if you're a trader and you have many losses in a row, or you're not sure what to do, or you have times where you risk more on some trades, or you think these trades will be winners or these trades will be losers. And we need to change the way of thinking about that because it's really important to think the right way in trading if you want to get the good results. So let's talk about how that all works. So the probability mindset in trading is probably one of the most important way you can see yourself as a trader, or you can change your mindset as a trader. It's something that you have to change in your mind. You have to see things differently. And I want to begin here with a quick question. So comment below in the chat and let me know what would be the chance of that your next trade will be a loser. Let me know in the comment below what you think is the chance of your next trade being a loser. Is it 50%, 20%, 30%? What will be your next trade? Is it going to be a loser or winner? What's the chance of that? Let me know in the comment section below. Pause the video, go write it down, and then come back here after. You did it? Awesome, cool, let's go. So if you're like most people, you will respond to this with your win rate, or the opposite of your win rate. So if you have a 65% win rate, you say, well, my next trade has a 35% chance of being a loser, right? Because that's your win rate. If you have your win rate being 80%, you'll say, oh, my losing rate is 20%. So next trade will be at 20% chance a loser. Now that's wrong. And I'll explain you why here. It's pretty interesting. So here's the truth about probabilities in anything in life, in trading, in anything. So a single trade or in any single event always have a 50-50 chance of being either like a winner or a loser in case of a trade. For a large number of trades, you'll find that you start to have a win rate, so a probability of winning that is different than 50-50 usually. It's going to be different than that, and that's normal. All right, that's because any event can be either or, but over a large number of trades, you'll find a pattern, a probability of winning or losing on that trade. Now, that is because of a simple reason. That is because there are many factors in the market, in the Forex market or any other market out there, that are unaccounted. And that's why only one trade has a 50-50 chance, but many trades have a different win rate overall. So we often think that the market is something that has a cause and effect relationship, and that because this happened, then this will happen. Or because there's this news here, this will happen. But it doesn't really work that way. For simple reasons, the fact that there's many factors in the market that we don't really think about, or that we cannot predict at all in the market. Things like someone could be sick and then they decide to sell the trade. Someone could be having something and decide to do something in the market. And participants don't really act logically most of the time. They don't make logical decisions. You might think, oh, well, everyone trades because of a reason, and I can figure out what the market does because of what and exactly where and all that stuff. It doesn't work, right? Because you never know what someone's going to wake up and think about. You never know what this person is going to feel or do in the market. You never know what this person wants to do, what business they have, and they want to start to sell the yen or sell the dollar, whatever. You never know that stuff, right? Because this is stuff that is not necessarily rational. It's not things that are logical. And it's things that people they don't plan for a long time sometimes. Like you might wake up and you see your trade going to a loss. You say, oh, I'll sell it today, it's bad. Or your trade could be a winner. You say, oh, I'll take my profit now. And people are not like all like qualified to trade. They're not like all people who know exactly what they do. Some people do for sure, right? But there's a part of people in the market that have no clue what they do. Or people that act on emotions, or they act on a feeling on a day-to-day. So some people now are on the sideline, they might take a trade tomorrow, and you don't know that. So any single trade you take, because of that, has a 50-50 chance of being a loser or a winner. You cannot predict that. The same thing goes when anything could happen. Like let's say you get sick, right? And you have a 50-50 chance of recovering, right? So the doctor might tell you, well, you have an 80% chance of recovering, or a 30% chance of recovering, whatever that is. In reality, though, there's a 50% chance of you recovering. Now, the issue here is the fact that when people hear, oh, you have a 30% chance, or you have an 80% chance of recovering, they say, oh, it's fine, no need to do anything, I'll recover. Most people recover from this, right? So they don't take any precaution, they do nothing, and the result is, well, they might fall on the people that don't recover because of that. So if you see it as a way where you have a 50-50 chance of anything, then you'll take your precautions. You start to do things, you start to eat the right way, you start to exercise or whatever that is, you start to plan to be able to get back on track, and that makes a difference in you being able to recover. So that might be obvious, that might be like not so obvious because here's trading versus like getting sick and stuff, but it really works the same way. So what you need to do is to adapt a probability mindset, and that means that any trade you take can either be a loser or a winner. And that means you gotta take your precaution. Like I said, people don't take precautions when they hear, oh, you have an 80% chance of winning, or you have an 80% chance of recovering, or you have an 80% chance of getting the results you want. Now, most people don't take precautions there. They say, oh, it's fine, yeah, it's gonna happen, because most people get it anyway. Most people get it, and that's fine. But you need to be able to flip this, where anything that you can control, you should control it. You should take your precautions. That means you don't risk much more on a trade. You don't take too many trades at the same time. Right, you don't do things that are crazy in the market, because any trade could be a loser or a winner in any case. Now that is going to mean two things, of course, because there's a flip side to it. There's a good side and there's a bad side. We talk about the bad side, which is not risk too much, but here's the good side. So first of all, like I said, don't take more risk in a trade because you think it's going to win or because it's a good idea. That won't work because any trade could be a loser. But on the flip side is, don't close your trades too early because you're afraid it's not gonna win. Like any trade could win, any trade could lose. That's just part of life. Doesn't matter what you take profit is, doesn't matter what your stop loss is, any trade could win or lose. That means that you're gonna be able to act on both. You gotta be able to think about not thinking it's gonna be a winner and not thinking it's gonna be a loser either. So you gotta be neutral when you trade. You're gonna be in that kind of gray zone in between where you do things that your trade will win, but you also do things that your trade will, in case your trade would lose. And that's how you're gonna be able to adapt a better mindset in trading, and that will make a big difference. So from there, right, you know that you have to let your trades run, and that's like a very simplified way to put it. But think about the fact that any trade you take in the market could be either a loser or a winner. And you cannot get down because it's a loser. It's just part of life. You cannot get happy because it's a winner. Now, if you want to get good results in trading, you got to think about having a stable line of kind of feelings. What that means is, don't get too excited when you have a winner. Don't get too pissed off when you have a loser. That's what it means. Okay, so some people, when are beginning traders, they have a win, like a big win, they're super happy. Then they talk to everyone in their family. They share the trades. They share on social media and stuff. They share what results they had, how much money they made, and so they're like too happy, right? Now, the more happy you are when you have a good trade, the more sad you'll be when you have a bad trade, the opposite. So that means that when you have a bad trade, you'll be like, oh, you'll be pissed off, you'll stop trading, you'll like smash your keyboard, that kind of stuff. All right, so all these things shouldn't happen because any trade could be either a loser or a winner. You should be expecting it. And so that means that, like, keep that stable line, that emotional line all the time, where if you have a win, you get like maybe a little bit happy. And if you have a loser, you get like a little bit sad, but not too sad. And you stay stable in that, so that you're going to be able to take all the trades you should take. You won't miss any trade, and you won't be impulsive when you take trades overall. So that's really huge. Now, of course, people still got to follow your plan. The only way you can follow your plan is if you have the right habits in place. And habits here make a big difference. Like, you might have the right mindset, but the next thing to it is going to be habits, and the habits you have in place. So I put together for you below, that I'll leave in the first link in the description, that talks about how to have the right habits to be able to follow your plan better. So it's a collaboration I've made with Mandy Jani, a trade psychologist that is super good in her field, and she gives you some tips about how to follow your trading plan better, how to stick to your plan better. So I'll leave that below for you. You can check it out, the first link, and I hope that's going to be helpful for you. Hope you can get some value out of it. Let me know your thoughts below as always. I'm curious to hear what you think of these videos in this format, and I'll catch you back here in the next video pretty soon. Ciao.